Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Monday, and we're at the 22nd of January, 2024 at 6:02 p.m. Central Time. You know, it's an amazing market. You sit here caring. The Dow and the S&P just up as though nothing matters. The market is still of the opinion the Fed's going to change its opinion and move soon on interest rates. I certainly am not in that camp. You'd have to get the data to prove it. I will change my mind if the data weakens. I haven't seen the data weaken. I need to see jobs weaken a lot. In other words, labor. We haven't seen that at all. And the stock market keeps looking at this and going, well, AI is the next new thing. I get it, but can those 7 magnificent stocks carry everything? Then we go to the metal markets, and absent inflation, because the market is saying it's not there, why else would gold be falling? You can't tell me it's because the dollar's rallying. It was only up 4 ticks today. That's nothing. Yet the gold gets hit. The silver market comes apart. Is that industry? Could be. The copper market's down to the 375 level. Industry down. China looking terrible. I don't know if you're watching what's going on in Taiwan with their export orders, what's going on in Hong Kong and their stock market in relationship to the mainland. It's down like a 30% discount. So things are coming apart in China in a very bad way. And today they announced, by the way, that they will get next year, for this fiscal year that they're now in, 5% growth. Of course they will. They can make up any numbers they want. When we look at the energy markets, again, the Houthis are saying that they have attacked a U.S. naval cargo ship. The Navy says that is complete fabrication on their part. Nothing happened. And the U.S. and the U.K. launch another set of strikes into Yemen. Gold doesn't bounce on the news. So you can only get the market going so many times, and the market has come to the conclusion, I believe this, that there is not going to be spreading of the Mideast war to get Russia, China, the United States all fighting each other. We don't know what Iran's going to do or not do, but it's in their best interest to do nothing unless the surrogates do what they're going to do. I'm going to repeat over and over. Those oil wells are very good targets. There's no way to really protect them. They're above ground, all their storage. They don't need that problem. And, you know, the world doesn't need that problem either. Then we have the last thing, that tomorrow's the New Hampshire primaries, with Ron DeSantis over the weekend dropping out. Does Nikki Haley get enough people coming over to make her a contender against ex-President Trump, or is this race already over? That's what the market's going to look at as well. So then we're into the contest of Biden-Trump all again. So there's a lot going on in the world, but none of it's friendly to the metal market right here. And it's not that the dollar's running, and it's not that interest rates have taken off. Interest rates are sitting in the 10-year note around the 4.1 area. Very few people expect it to go back to the 5 level. And I don't think there's a lot that think it's going down to 2% right away either. So we will see. I mean, over the weekend, I read. I read stories where we're back to 5%, and I read stories where 2%. I've read stories where there'll be no rate cuts, and these are by top analysts this year. You heard me, in 2024, and others that it's still going to start in March and it's going to be all 6. I read, and you pull back the lid on what everybody's saying. It all has to do with we're not reading the data right. The market's wrong. Everything is really weakening underneath the numbers that we're seeing, and it'll play out soon. I heard those same things, not from necessarily the same people, all of in 2023 as the recession was coming that never came. You know, if you cry wolf long enough, maybe you get right. Even a broken clock is right twice a day. So when I look at the gold market, my attitude on the gold market is as the market is falling down, if you look, your support in the market on an 18-week moving average is back at 1993. I thought it was so far ago, a while back. It's not that far anymore. You're $27 away, roughly. When you take a look at the action in the chart, You haven't done anything. Now, let me explain what I mean by that statement, because I don't like making blanket statements you don't see. If you take the high up here, you take the low down here, these are your spikes. I think you'd agree recently. You could even argue this spike, you can argue that. I don't want to do that. I want to take the spike to the correction. And where are we? Nowhere. I mean, you're just drifting in about a 50% correction plus in the market. When you put the swing line on, and this is a study that I wrote, lower highs, lower lows. That is bearish. So to negate the bearishness of the market and at least break the pattern of lower highs, lower lows, you've got to get back over 2041.90. Haven't done it at this point. Where's the battleground? It was the 18-day average of closes. We saw that for quite a while. You got over it. You're about under it now as much as you were over it. Do you disagree with that? Just take a look. And you came down last week and challenged the 200-day average, getting a little bit of a bounce. So if the market wants to add another layer down, because you do have the trend down and the bias is down, since the way I teach charting, when you're under the 18-day average of closes, bias is down. When you're over it, bias is up. Then you look at the swing line. Is it a buy or a sell? And then you look, where are you in relation to support zones, resistance zones, and momentum? So in looking at this, where's the Bollinger Band? Still lower. So we made one challenge of it last week, got a nice little bounce off of it. Now the question is, does it want to come back down there? It doesn't have to. The market's in oversold territory. Today I finished up the overbought, oversold, how you do what I call a 70-30 rule in the slow stochastics for my new charting course. So I'll be back tomorrow recording 2-3 chapters minimum. Day after, I'll get through with the slow stochastics. Then I'm on into the others. So I'm 2/3 of the way done with my course. It is the 22nd. I may well make it by the end of January. That was my goal. I won't be very late, I can tell you that. When I take a look at how the market is in momentum, it's oversold. Any reading in slow stochastics that's under a 30 number is oversold. Embedding requires both these numbers to be under 20 or over 80 a certain amount of days. You're not there. Trend down, bias down. If the market falls for support 2011.80, 200-day average down to 1995.20. Wait a minute, didn't we just say on the weekly chart we saw 1993 support? So you're getting now confluence of where a potential support is. When we look at the gold-silver ratio, once we crossed back over through here, we came down and challenged this number and took off. We went to a new high on this move. So gold is really outpacing silver. What does that mean? It means industrial metals are in problems. I think tomorrow we get the Richmond Fed numbers. Again, industry. We're going to get an idea as to what they're talking there. What about the silver? You have the most bearish of signals called an embedded slow stochastic reading. It's when momentum converts from going down, becoming oversold, and then locking into a downtrend. It loses that reading when and if the red line, the K line it's called, closes over 21. It's at 10.2 right now. Until that occurs, the market tends to fall. Another event happened here. And these are always great to learn from. So let's see, I want to take you right there, right over here. Right here. The 18-day got under the 100. And I told you when that happened, I said, we've had a bearish crossover. That could mean we're going lower. Low might be the lower Bollinger Band. Kaboom. You're right there now for all purposes. So you've hit your first target. I also teach in my charting course to never go short a Bollinger Band. 95% of the time you'll stay within the bands. There's no edge in selling the band and no edge in buying it. And I know I will get people tell me, but if I had bought it, look at how it went up. And I agree in that example. And if you bought it here, you got your butt killed. I can go on and on. There's better ways, in my opinion, to come into the market than that. Suffice to say, bearish. Copper market, staying under the 18-day average. And right now, right here, we got to pay attention. We just got to cross over where tonight, the 18-day average is getting under at least intra-evening 381.05, the 200-day average. So that's another bearish crossover in the making. Now, this market had a bearish, I want to show this to you. You had an embedded reading, and right here you get a reading of 2293. The reality is the market's right on a moving average. I've always been stuck. What do you do with that? The goal is to go to the closest main moving average, but you're on it. It's a very, very difficult call when that happens. Maybe you get back here, but you don't have to. And will we re-embed? If you don't immediately get the red line back under 20 on a close tomorrow, the odds favor it's going to try to rally some more. My problem is, and I can't figure it out, it's always giving me a hard time, is it the 200-day average of this area up here? Regardless, to me, it's a signal not to be short. That's the difference. I don't care what these are. When you're under the 18-day average, I don't really teach that you're going long to put on a bold position. I might in the future. I'm working on an algorithm course to do that, and it just might give you a lot more swing trades in the market. And I'm looking for what I'll call me, not necessarily you, high probabilities. We'll see if I can do it. I don't have the results yet. Lower highs, lower lows, bearish. This is fully embedded. So this chart continues to stay in the bear camp. And here's another problem. You get this 18-day average getting under the green, the 100-day, that's another sign you should be going out. So metals are deflationary right now. There's no other way to talk about them other than they're deflating. You don't have $4 copper, you got $3.75. You don't have gold going up here, you've got gold coming down here, just the opposite. And the dollar is wavering. Now, the dollar is embedded. Both numbers are over 80. Let me show you this. Both numbers are over 80 the day before and the day before. And the day before they were not. So tonight they embedded. Two things happen when you embed. Normally, if they can keep this market from the red closing under 79, the market makes a run to the closest of, the goal is a Bollinger Band or a key moving average, in this case, the 100. If it loses the reading right away, you go back down to one of the main averages. Could be going to 102.70. It'd be nice to get the 18-day average, but it's not necessarily the goal in the market. So, instead of us talking $2,200 gold, we're talking $2,000 gold, support at 1993. I talk about this and a lot more every day in my research. Now, I write 2 reports a day. I put out in the mornings, first thing in the morning, in my full research, I put out the morning subscriber video for where I cover 40 some odd charts. I record between 5 and 5:15 in the morning, that's AM, early time, and it's in your hands, I don't know, 5:45 to 6 AM ideally, by the time I render it and get it out to you. I talk about fundamentals in my reports. I talk about what I see coming up. I like to point you in direction of the next event that's happening, so that because we're trading futures, where do you go? It's there that I talk specific entry, stop, profit objective, win, lose. I track all the trades with you. We keep them going through there. I give you different money parameters, stops for normal trades, slow stochastics, a whole different way that you trade the market. Still, the most profitable setup I've ever seen are slow stochastics. How do you get free? I want to use that word to those of you that haven't tried this. Free access. Just go to iraepstein.com and go to free offers. You'll see all our free offers there. Choose a bunch while you're doing it. Move your cursor up to the top here. Give the icon that you see a link when it comes up. And if that won't work for you, call my staff during the day hours. They're there. They will pick it up. They will get everything sent to you. What do you have to lose? It's January 22nd. It's been a good January for my traders so far. That I can back up left and right. Now the question next, what trades do I have on? Well, now if you do this, you join into those trades and you can see where we're at. And we do have trades on. I'm Ira. You have a good day.